price of crude may have rebounded off of its lows, but the cost of gasoline is still down huge versus a year ago, and that remains terrific news for companies that depend on the American consumer feeling flush. Regular viewers know that I like the theme park stocks as some of the best ways to play the lower price at the pump. Because not only do families have more cash in their pockets, it's also much cheaper to get in a car and drive an hour or two to the closest amusement park. That's why I wasn't surprised at all when Six Flags, the largest regional theme park operator, with 18 regional parks located throughout North America, reported a solid quarter this morning. The company reported a steeper than expected loss, but the earnings miss was entirely because of stock-based compensation expenses. And more important, its revenues came in higher than expected, up 15.5% year over year. And it's not that important a quarter, but it's a great arbinger. The number of customers with membership plans or season passes increased by an astounding 53% year over year. Very encouraging as we head into the peak summer months for the theme park business. Now, Six Flags has given us a quick 8% since we had the CEO on back in February. And even with the stock trading at less than $1 off its 52-week high, it's still got a bountiful 4.3% yield, much better than Treasuries. I like this one very much going into the summer. Don't take it from me, though. Let's check in with Jim Reid-Anderson, the chairman and CEO of Six Flags. Hear more about the quarter and where his company's headed. Mr. Reid-Anderson, welcome back to Mad Money.
It's great to be back on your show, Jim.
All right, Jim, how is it possible that you have a 53% gain in what I think is the most important metric that I follow of your company, this active pass?
Well, I think you understand the value offering that our season pass and membership program is for our guests. And I think our guests have worked that out. And so we had a phenomenal start to the season with both season passes and membership programs kicking in, and our sales have been astounding, as you described. We're up 53% as we go into the peak season, and I feel very good about that.
All right, Jim, what does your model show you about people who get one of these passes? How often do they come back?
It's interesting. Both with memberships and season pass, we see visitation in any year being in the 3 to 4 range, so 3 to 4 times. And as you know, Jim, every single time they come, they spend money. So that active pass holder is the most valuable sort of guest that we can get, because on average they'll generate, let's say, $100 to $120 per season versus $50 to $60 for a single day guest. So pushing that number up is extremely valuable for the company.
And again, you always tell me that you add something new. So when I go to the park this year, I see something better than I saw last year.
That's really true. We have something new in every park every year. Innovation is in our DNA, and this year is no different. We've got 5 world record-breaking rides that are coming out that are very exciting, and every single park has something. We're not only innovating in the rides, we're innovating in our all-season dining pass and various other aspects in the park. So I think our guests will be very pleased with what they see.
All right, Jim. The year-over-year, obviously, the decline in gasoline is incredibly important. When you do your analysis of where people come from, there are a lot of people. I go to the Jersey one. I mean, there are a lot of people within an hour and a half of there. I mean, really major metropolitan areas. They might come in abundance with lower gasoline prices this year.
Yeah, I think, Jim, it's fair to say, and I know you love this sort of comparison, but I think it's fair to say that Six Flags is the perfect way to play the North American consumer. As you know, we drive both growth in the share price, but also growth in our yield. We've done really well, as you described, a 4.2% yield today. When you look at our consumer, we have the whole demographic. We're in the top 10 DMAs. We have 175 million guests within 100 miles of the park, and the gas price is low. So it appears to be working in our favor, certainly in the first quarter, with a 13% growth in attendance. Very strong performance overall.
You know, one of the things I love is that you innovate, and you innovate not just in terms of technology, but you've got this idea of grad nights. Now, those of us who are involved with high school seniors, we don't want them driving after sometimes they do get a little carried away. We want them to be in a safe place. This must be a parent's dream, this grad night.
It's an absolute dream, you're right, and very successful in the parks where we have implemented it, and we're expanding the number of parks doing this. Once they're in the park, they know they're safe. We have caretakers there that are watching them, and of course, all of our own teams, including security, and it's been a huge success and growing rapidly. So that innovation comes on many fronts. And I think, in addition, we talk about innovation, but we've introduced, or we're going to introduce, Holiday in the Park at your local park, Six Flags Great Adventure this year, And we think that'll be a great success, as it has been at the 6 other parks that have had that program.
Now, how much do you think was weather? Because I don't want people to get too carried away in thinking that year over year the numbers were so good. Just because you know how excited I am about the story, but I never want people to feel overly, way too bullish if there was something weather-related that helped.
I think weather was actually not dissimilar to prior year. So, maybe it was a bit better this year. But I think the single greatest factor has definitely been the approach we took to our season pass and membership program and really driving that growth early. And that has been a huge success for us. And the momentum is very, very strong, Jim. I'd also echo for you, you love cash earnings per share. I know you do. In this last 12-month period, we're up 28%. 28%. And if you go back 4 years, 4 or 5 years, our average is 23% growth per year. And to get to that long-term goal that I described to you last time I was on your show of $600 million of EBITDA by 2017, we have to grow by 13%. So I think we're in a position now where we're really, really set up well to be able to achieve these goals long term.
Well, you've done a remarkable job, and I recommend your stock to everybody. It is the ultimate play for America, and I love your dividend, your distribution, fantastic. Jim Reid-Anderson, Chairman, President of CEO of Six Flags. Thank you so much, sir, for coming on the show.
Thank you, Jim. It's a pleasure always. Thank you.
One of the easiest stocks to own for people who want growth and income. This is a terrific stock. Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.